All right, so there's absolute carnage in the markets this morning. I'm recording this about 2 hours roughly after the market opens, so something could change between now and the end of the day or the next day or whenever you see this. So keep that in mind. But the Nasdaq's down almost 4%. I think it's came back a little bit. I think it's down about 3% where we stand right now. Yeah, just under 3%. S&P is down about 2.5%. The volatility index is up massively. The volatility index, I think, hit 33 or 34, which, if we look at the chart here, in the 21st century, the the volatility index has gone above 40. I believe it's 4 times, and one of them was today. So again, that is just absolute carnage, like just complete carnage. That the fourth worst day of this century is today. And again, for all we know, we could close up and we only end down like 1 or 1.5%, and it's not all that bad. But or maybe we sell off by the end of the day and we're down even more. So nobody knows. But that's besides the point. I wanted to make this video for a couple reasons. Number one, be like, okay, what's my thoughts on this? And number two, what am I doing? So number one, what's my thoughts on this? I mean, first things first here, look at this long-term S&P chart. I mean, do we even notice that this blip it's a blip on the radar? So I am not overly concerned because from what I can tell, there's nothing that points towards we're going to get like a 30% pullback. And even if we do, that just provides a very good buying opportunity. And this is so important. Something that I brought up a lot before is that one of the most important ways to look at investing from a psychological perspective is that if you look at an individual stock, for example, that you like, if that stock went down 20% tomorrow and it had nothing to do with its fundamentals, would you like that stock? Not only would you still like that stock, but would you like it even more than you liked it the day before? If the answer to that is no, then you're doing something wrong, because the answer to that should be yes. And this is something that is very, very important to understand. Pullbacks, number one, are normal, and number two, they're a good thing because they just provide good buying opportunities. I mean, when it comes to pullbacks, all they really are is money transitioning from the weak hands to the diamond hands, or from the weak hands to the strong hands. Now, again, there's exceptions to this rule. There's some of these. There are some companies in some areas of the market that are overly valued that it's a normal pullback. But when you look at like the S&P and the broader market as a whole, the chances of the market pulling back significantly and it taking like a decade or two to get back to where it is, it could happen. Obviously, it's possible, but it's extremely unlikely. So when you see these pullbacks, typically what it is the weak hands selling and ending up losing money. Or another good way, another possibility is like your hedge funds and whatnot trying to time the market and making short-term trades. That because they do move markets quite a bit. That's an important thing to keep in mind as well. But 10 years from now, are you going to care about a 10 or 20% or even a 30% pullback in the market? Like, absolutely not. Like, absolutely not. Now, again, you need to learn lessons from it, but absolutely not. You're not going to care. As far as moves that I've made, the only thing that I have done is I bought a little bit more Bitcoin. That's the only thing that I've done. I will be going over my watch list later today, probably by the time the day is over, because I got stuff to do after this. But if you look at Bitcoin, it sold off to about 70. Actually, it hit about 76,000 Canadian back on July 8th. And the one thing you notice here is that it's at about 75 and change. So Bitcoin is sold off to almost exactly where it sold off to back almost a month ago. So that's something to keep in mind here, is that if it can hold this level, I think that this probably is the bottom for Bitcoin, and we only go higher from here, but obviously nobody knows. But I think Bitcoin under 100,000 is egregiously overvalued. I think Bitcoin is worth $200,000-300,000 a coin. this halving cycle, and we are still miles from that. So I think Bitcoin is egregiously undervalued where it's at right now. Obviously, I could be wrong about that. Everything here I could be wrong about. But again, that's just my opinion there. I think Bitcoin's egregiously undervalued. Other areas of the market, if we're looking at like broader areas, the only area that's really overvalued, in my opinion, is the large cap growthier names. That's really the only area. The smaller cap names, especially the value side, the mid cap names, especially the value side, are definitely, if anything, undervalued. If we look at oil, there's a lot of the oil names I think that are a buy where it's at right now. Some of the industrial names, some of the material names, some of the financials I think are a decent price. So keep an eye on the markets here, because there's really only one area that I think that is overvalued right now, and it's the large cap growthier names. So again, obviously there's certain outliers there, but keep an eye on that. If we look at the S&P here, the S&P is down about 8%, give or take, 7.74, at least at the time of me making this video. So something to keep in mind here is that the overwhelming majority of years, we see at least a 10% pullback in the markets. And we have not seen that yet. So chances are, at least at some point, we will pull back more than we have pulled back. I think when it comes to these kinds of days, chances are we see a little bit of a snapback, because markets never go up in a straight line and they never go down in a straight line. So if we do pull back 20%, chances are you get some rallies that fake people out thinking that the pullback is over during that time. So the real question here is that how do you play it? How do you play this? And it's actually very simple. When you're talking about the market, if you're like an ETF investor, then I think it's a little bit different. But if you're looking at individual stocks, the play is very, very simple. You have a watch list of companies you like, whether it's companies you own or whether it's companies you don't own, and you update, you find price targets based on previous valuations, right? I mean, if we look at, let's just look at NVIDIA here, for example, because I think it kind of proves my point. So NVIDIA, it's still way overvalued. A PE of 62, a price to free cash flow of 67. So I mean, for me, just looking at that from bird's eye view, it would probably have to come down 50% from where it's at right now, at least to be fair value. So that would imply roughly about a $50 fair value. So that's what you do. It's very simple. You have those watch lists and say, hey, this is a company I'll pay $50 for, and it's currently at 55. Okay, well, I'm not going to be buying it. It pulls back another 10%. Okay, for sure. Hey, now it's time to buy. If it never pulls back, you don't buy. I think it's actually people overthink this stuff way too much, right? There's really two keys to investing, like I've said time and time again. At least my opinion here. I'm no expert, but you find good companies and you buy them for a good price. Figuring out what a good company is, even though there's a lot that goes into it, I think that it's easier to find good companies than it is to simply be patient to buy those good companies for a good price. That is the harder part. People think that it's the hard part is finding the best companies and which company are you going to. The hard part is being patient enough to not overpay or to just buy the high flying companies. That's the hardest part. The hardest part is not overpaying. So you really need to keep that in mind. So that is what I'm doing. Later today, I will go through my watch list and look for the companies that I think are at a good price. And I will start buying them. Whether it's dollar cost averaging or whether it's putting in limit orders, that's what I'm going to be doing. And I think it's incredibly simple. And that is the best way to invest. Now, again, it's not perfect, but there is nothing that's perfect. The most hassle-free or stress-free way of investing is quite simple, because when you do it that way, there's not any guessing that goes into it. And you don't have to worry about timing the market. That's the other thing that people lose sleep over and make way too big of a deal. It's, I gotta time the market. It's like, no, you don't. The only for sure way to know is you're buying a good company at a good price, because it is impossible to time the market. Right? The most foolproof strategy is buying the good companies at a good price. That is the only foolproof strategy. So, again, that is what I'm going to do. But in a nutshell here, I'm not panicking. I do think that we will go lower over the next few months, but I don't think it's going to happen in a straight line. And I do think by the end of the year, we're probably in an uptrend again. Do we hit another all-time high? I would say probably 50-50, maybe slightly less than 50-50, because the markets were already up, like 15% roughly at one point. So that already is a good year. Like, that already is a pretty good year. So that's my prediction. Near term, over the next few months or so, we probably go a little bit lower, but it's not going to happen in a straight line. It's not going to happen in a straight line. And I think probably November, December, maybe even in October if we're lucky. Maybe it's sooner for all we know. Nobody knows. But just my prediction is that we do trend higher over the last 2 or 3 months of the year. Because by then, the Fed, their plan is going to become even more clear than it already is. They're probably going to become more accommodative. The election will be happening in November, so that'll be in the rearview mirror. We're going to know what to expect there. And by then, I think that we're just going to have more data available. So anyway, that is what I wanted to bring up today. I'd love to hear other people's comments, feedback, all that good stuff. Please like, comment, subscribe, and stay tuned for more.